Hi everybody, today is April 7th and today we're going to talk about the price of Bitcoin. As you can see, the price of Bitcoin is currently dumping a little bit right now. So the question is, are we going to be able to hold this moving average as we have been able to hold in the past? Or are we going to continue to push, are we going to break below and then continue lower? Before we answer that question and continue with our analysis, please read this disclaimer and you can pause this video as you read it. Okay, so in our last video 2 days ago, we talked about how I wanted to see us hold the 50-day moving average if we were to come down and then perhaps bounce and push up higher. And I still have that stance today. If we look at the past, we've seen Bitcoin hold the 50-day simple moving average over here and over here, right? And that seems to be very strong support for our short-term moving average, which is this silver line, the 50-day simple moving average. I also talked about how I was looking at this pattern over here, a larger pattern, as sort of a longer term play of this pattern that we saw in late December, right? And it seems to, we seem to follow through all the way up to the end, and now instead of pushing up higher, we're starting to slump a little bit. So the question is, why is that, right? So there's several reasons. First, it could just be that we are a little bit overbought on a longer time frame, right? If we zoom out, we can see that we've had six straight consecutive monthly green candles, and even in a healthy bull market year like we have this year, and like we had in 2017 and in 2013, we still had red months, right, over here, and in September of 2017 and March of 2017. So right now we haven't had any red months for 2021 or just in the last 6 months. So I'm actually not too worried if we do have a red month. I mean, that would actually make me a little bit more relieved, honestly, because to see this thing go just straight up without any, major red months, it is getting me a little bit worried. I mean, overall it's bullish, right? But it is healthy. It's healthy in a strong, even in a strong bull year, to see a pullback once in a while, right? And actually, if you look at the technicals, we're actually quite strong, right? We've been holding this 50-day, as I just said. We've been holding it very strong in the past, and I expect us to hold this level. So in my opinion, I do expect us to kind of just move sideways within this Fibonacci channel, bounded by here, 64,000, and around 47,000. So I think we're just going to move sideways, eventually build up energy like a spring, like a coil, and then push up higher. I do want us to hold this level, though. This is our first line of defense, right? The 50-day simple moving average. Our second line of defense, which is also going to match up well with the 100-day simple moving average, is this Fibonacci level at 47,000 over here. And I can see a scenario, if we're unable to hold the 50-day, I can see a scenario where the 100-day simple moving average comes up, crosses with the Fibonacci level here, and we see the price come down, find support, and push up higher. But hopefully we're able to hold our first line of defense, which is the silver line, or the 50-day simple moving average on the daily chart, right? So they're getting close to meeting up, but let's say we have a scenario where the 50-day moves forward. We see the price go sideways, eventually touching again one more time, and a strong bounce up. So that's what I want to see. That, to me, is the most bullish sign at this point, because as we're trying to see now, we've been moving sideways for a while now, so I'm not expecting any sudden moves up to the upside, right? I'll be very surprised. I'll be happy, but I'll be very surprised at this point. As you can see on our oscillators, the momentum is starting to move on to the downside, right? We had some hope over here with this green print on the histogram bar, but unfortunately, this cross didn't materialize into a bullish cross, right? It didn't go up as I was hoping it would, and we're starting to slump and pull down now, printing a larger red than larger green candles. So giving benefit of the doubt to what the chart is telling us, we have to remain bearish in the short term, at least in the short term, still bullish on the longer term, right? Obviously, we have higher lows and higher highs on the daily chart. So in the longer term, we have to give benefit of doubt to the bulls that the price will continue to go higher. But in the short term, we will likely go sideways, right? Also, the RSI starting to slump. We've been seeing a bearish divergence. I've said this many times in the past videos. It's just lower lows, highs, right? And what we want to see, happen is we want to see us to start making higher lows and higher highs on the RSI, on our oscillators, even with the MACD and with the price action, right? Because as long as the price goes up and we're starting to see these oscillators go down, that's a bearish divergence, and that means that there's even though the price is going up, we're starting to see the volume slump a little bit. So there's not much conviction to push the price higher. We want to see the volume rise as the price is rising, and that's going to help push the oscillators up, giving us more conviction and confidence that there is strong buying support to push the price higher. So overall, I am optimistic and bullish on Bitcoin for the rest of the year. However, I would actually be sort of relieved if we have finally a red month, right? So looks like that's what might be playing out for this month as the price continues to move sideways, and that's not actually a bad thing, because having this thing coil sideways is just going to create energy, right? We've seen in the past how when Bitcoin goes sideways, like over here, last year, it went sideways for 3 months from May to the end of July, and then it pushed up higher, right? Same thing here, September, October, we went sideways a little bit, and that created energy for us to push right here, sideways, creating energy to push up higher, right? So that's what I'm looking for, maybe some more sideways, and then a strong push up higher. So of course, something that I've also been talking about in the past is the pi cycle top indicator, and that's looking very, very close to crossing right now, right? And in the past, when it has crossed, it's spelled either a short-term market top like we had in April of 2013, which coincidentally is also April right now in 2021. So that's interesting. But in the past, our past two crosses have marked the beginning of the bear market, right? In 2017 in December and in 2013 in December as well. And so a lot of people talking about how like this cross might not spell the ultimate top for this market cycle. It could be like 2013 where we have two crosses, two tops, right? But the interesting thing is that even in 2013 when we had two crosses, this is a parabolic run. This went straight up. And right now what we're seeing is seeing consolidation over the past few months. So this isn't looking like, there's not a lot of like bullish, like overly FOMO bullish sentiment or price action, right? So, but still, we're still very close to crossing, right? And when we cross, we'll see this red dotted line here, here, and here. Now, the interesting thing about this is that even though this is close to crossing, we've talked about this also in the previous videos, the other indicators are also not in overbought territory, right? Because when we crossed in the past 3 times, let's look at this first. First indicator is the multiplier, right? The 2-year multiplier. Here, we went above this reddish orange line, and we started to have a shaded red area here, here, and here. We're not even above that line yet, and so that's not overbought yet, right? Pual multiplier in 2013 here, we had the red line spiked up into this red shaded area, telling us that this could be overbought, right? We're not even in that area yet. Same thing with the golden ratio multiplier. Over here, the price action spiked up to the dotted line, 2013, 2017. We're still trending on this purple line, right? We haven't spiked up and touched that dotted line yet. Of course, the Z-score, huge spikes in 2013, April, December 2013, 2017, December. We're not even we haven't even touched this shaded area yet, right? So even though the pi cycle top is right about to cross in the next few days, I don't necessarily think this is going to cause the market necessarily to crash hard, simply because there's no irrational exuberance that we had in the past, right? It's not like going straight up like we did. So what I'm looking for more is this could possibly be a false positive for the first time for the pi cycle top. And keep in mind also that this indicator was created in 2019, right? So it was created after these crosses happened. So we don't know if this can predict the future. So that'll be interesting to see. Honestly, I'm looking, because everybody seems to be talking about this. A lot of analysts are talking about this cross that's about to happen. And I would just like to see this put behind us, honestly. Even if it ends up being a false positive, I would say I would care more about what the price action is telling us on the chart, right? We've been holding this level, the 50-day simple moving average, very strongly over the past, really the past year, right? Let me look at this. We stayed above here, and when we had our first major correction in January, since that epic rally from October of last year, we bounced very hard right here off this simple moving average. And then just recently in late March, we also had another strong bounce. So even if we do pull back, I expect us to bounce again hard, or at least hold this level, right? And I'm definitely expecting us to hold this level where we have confluence of this 100-day simple moving average and this Fibonacci level, right? I'm expecting this to hold. If we do continue going sideways, as I predict, before pushing up higher into new highs, this level I think it at least will hold. Now, if we don't hold 47,000, if we continue lower, that's going to be bad. Why? Because we're going to start to make lower lows and lower highs on the chart, right? Right now we have higher lows and higher highs, right? But if we start to break below here, that could mark the change in the direction of the price action, and that could be bad, right? Because lower lows, lower highs, that is a bearish trend, and so we want to see 47 hold. We want to see this Fibonacci level hold, right? And traditionally we've seen those levels hold, right? Because look at here, when the 50-day simple moving average crossed here and we bounced off, this is also the support level of this Fibonacci channel, right? And so if we do break below the 50-day and we come down here, I think that the fact that we have a confluence of the moving average and the Fibonacci level, kind of like we did over here in late January of this year, we have a strong bounce up higher. So I'm not too worried about the price cycle top cross indicator or any short-term bearish news or price action. Again, we have to look at the monthly chart, right? 6 consecutive monthly green candles. It's not out of the ordinary to have a red month once in a while. That's actually healthy. So I talked about how in, I believe 2 or 3 videos ago, or 1 or 2 weeks ago, I talked about how I was looking for a red month, either in April or in May, right? So it looks like April could be our red month. And again, that's not bad, right? It's okay to have correction once in a while. And the fact that the daily chart is still looking very bullish, right? Our overall bigger picture trend is still looking bullish. I think that going sideways for another month or two is not necessarily a bad thing, right? Again, I'm repeating myself, but it's important to reiterate. Going sideways is not a bad thing. Look at this. Look at all this energy stored for a huge push, right? Last year, all this energy, sideways action, like a spring coil ready to explode. Let's do that again. If we can do that again, and then push up higher to 100,000 or beyond, I think that's what it could take to take Bitcoin above the 6-figure level for the first time and beyond, to maybe even up to $300,000 or $400,000, right? So moving sideways is not a bad thing. Personally, I'm not selling any of my positions. If this thing does come down, even to this Fibonacci level, our first line of defense, remember, is a 50-day simple moving average. If we do come down to this Fibonacci level, I'm personally buying more. I'm buying more coins. I'm buying more mining stocks. Of course, Riot and Mara, my favorite mining stocks. Yeah. Oh, by the way, just because I'm buying doesn't mean you should buy, right? This is just my own personal decision. Always make your own decisions. This is just analysis and entertainment purposes for this video. So yes, overall, I'm bullish on Bitcoin. And yeah, so also corrections, don't be afraid of corrections. It's healthy in a bull market, especially since we've had 6 consecutive monthly green candles in a row for Bitcoin. Having a pullback is not a bad thing. So I'll definitely update you as the pi cycle top indicator it looks like it's about to cross within the next few days. I'll make another video when it does cross, and we can look at it together to see if this thing actually does spell the end or not. Again, I don't think it will, but it'll be entertaining and fun to see what happens and what the community says. So yes. Anyways, thank you for watching this video. Please like this video, leave a comment, and subscribe for updates if you found the video helpful or informative. Thank you again so much for watching my channels, and also for all my subscribers, thank you. It means a lot, and I appreciate all your support. Thank you, and have a great day.